So yeah, the lesson here is, guys, markets repeat themselves blatantly. All right, it's obvious. Now, it's a mirror. And the reason why is because people start buying at this point, or in other words, what really makes it happen is where I'm drawing all these red arrows, it's areas where people are pulling off their shorts. Now, when you pull off a short, you're effectively getting long, okay? Because the opposite of short is long, all right? Now, if you're taking longs out of the market, again, the opposite is short. So effectively, you're saying the market will go down and it will sell. So you've got the same thing here. You're just mirroring what people have done. People are pulling off their long orders here because that's a point of reference. Now, the game of trading is mastered by understanding where and when and how, in what size and what investment size, it is good to be taking orders in and out of the market. That's what makes trading work, pretty much. But the key idea here is not to see this once and say, okay, well, that was random, because it's not. It's not at all random. All right. If you go to your weekly, I'll just remove all those red arrows because they look awful on the weekly chart. You've got candle wicks that stop here, okay, and here, and you'll notice that they all stop at different levels. You see that? They're all not as tall as each other. This is going to be very thin lines, but you can just about see that each wick has a different area, which probably coincides with this. Yeah, you can see that there. The wicks, again, are the same. All right? So it's absolutely no surprise that when we come to now, look, the wicks more or less coincide with the lines I've just drawn. All right? Especially there. And again, they're all different lengths, aren't they? They don't all stretch down the same amount. Okay? So that is just reflecting the market on what it once was and what it is now. And it's the same thing here. Okay, you've got all this rejection. So the reason why I'm telling you this is because it gives you an idea. Okay, well, the market's come up. Everyone has just removed their positions who's making money, clearly, because the market flipped the other way. So wouldn't you want to be one of those guys making money and exiting positions at the same time as the guys who are making money? I mean, I would. I sure would be out of my longs up here because of this. I would sure be out of my shorts along here, where I've got numerous signs that people are buying. It's rather simple. If you haven't read my latest blog that I wrote, I would. It's really good. And it describes this inner game of trading. This is literally a game. It's you versus them. When you're long, you're against the short traders. When you're short, you're against the long traders.